All right, and we're live. Hello, everyone. Let's give it a minute to join. And if you're joining us, let us know in the chat where you're joining us from. That'll be awesome to know where you're joining us from and what you're looking to learn today. Because we're going to talk acquisitions. Maybe we want to talk some case studies. Let me know in the chat where you're from and what you're looking for. All right, who we got here? Hello, Deshaun, Washington, DC. Good stuff. Cool. So I'm going to give it a minute or two for some more people to join us. If you have questions, put them in the chat for now, and I could answer them. Germany, nice. And I could answer them before I start my presentation. And I could share some more stuff that we got going on right now. Where else people are joining us? And let us know, when did you hear about us? That's interesting. When did you hear about us, and what got you to follow us? I guess follow us, our content, and just acquisitions in general. What is interesting for you in acquisitions? Coventry, UK. Nice, good stuff. All right, so I'm going to give it another minute or two. So in the meantime, if you have questions, let me know. In the meantime, I can also share with you some really cool stuff. Looking to learn how to do high-level due diligence and completing an LOI to get deal tied up. That's a great goal. Good stuff. What kind of a deal? Do you have a deal in mind already? A deal that you're working on already? And if so, what's the deal? Which country? What sector? What size? Where did you find a deal? Why the seller is looking to sell? Well, let's get started with some screen share, and maybe some more people are going to join us soon. But either way, I'll just start with some values. So share screen. So just let me know, please, in the chat if you can see my screen. That'll be great. You should see my screen right now, probably in a second or so. And probably don't even need my headphones. All right, so I see my screen. Cool. All right. Let me know in the chat if you can see my screen, and we'll get to work. Okay, cool. Yes. Cool. Good stuff. So let's talk about what I want to go through today, because I mean, I'm telling you, some of the results I've been seeing in the last year are just insane, seriously insane. And I really want to be able to share those things with you, to add value to you for joining me in this call, and support you as much as I can. So let's do that. Let me go to a few things that I have in mind. So let's start with this. So there are three things that I'm going to walk you through today. All right, three main important things. And we found out that our best clients mastered those three things, right? So what did they master? And then I'm sure, I don't know if some of you watched some of the case studies we have out there, some of the interviews we have out there. If you did, please let me know in the chat as well. I'd love to hear if you went through some of those, if you saw some of their results and case studies, and what's possible, because I want to make sure that you know what's possible, right? Before I even walk you through the how and how to do things, I want to make sure that you understand on what we do and why we do it, right? So there are basically three things that you need to master in order to be successful at that, right? Anyone want to guess in the chat what's the first thing? Anyone else want to guess those three things? And Deshaun, in terms of links to the case studies, maybe one of my team members could post in the chat, or you can go to acquisitions.com and scroll to the bottom, and you could see some of the interviews in there and some of the results in there. So you could go to acquisitions.com for that. So 3 things, guess in the chat, what are some of the 3 things you got to master to be really successful at this? And when I'm saying successful, for me, it means buying a business doing at least 7 figures a year in revenues, and ideally more. Like some of the results that we have, guys, like one of our clients, Michael, just rolled up 16 companies in less than 6 months, totaling 62 million in EBITDA, around 200 million in revenues. Okay, so I see mindset. Well, mindset is cool. Financing, I see. Okay, cool. So here's what I think are the 3 things that you got to master. So we're going to go through them and then just go through each of them. So let's actually start with one of them. So the first one, as far as the way that I see that, is anything related to deal flow, right? And if you're a newbie, it might be, yeah, I don't want to overwhelm you, so we'll see. I'll see what I can do here to not overwhelm you. Anyway, by the way, if you want, I'm going to write a lot of notes today. So if you want to get access to this folder of notes, write down notes in the chat or just private message me on Facebook, and I'll make sure that we send it to you right after we finish the call. So let's start with deal flow, right? So that's number 1. So what do we have in deal flow? As far as I'm concerned, there's few things involved when it comes to deal flow, right? So it starts with mindset, of course. So why won't we start with mindset, right? So with mindset, why we're even talking about mindset? I found out, and I'm not the first person to say it, is that 80% of our results in life comes up from our psychology, from the way that we are coming to things, from how we do things versus what we do, right? Think about it this way, like someone who's working, I don't know, as a waiter in a restaurant all day, it's very difficult to build wealth, right? So it comes down to what you do, but also comes down to how you do things. So it's a combination. So for example, the beauty with acquisitions is that the vehicle is, in my opinion, the best vehicle in the world to build wealth. You only need one deal to be in the top 0.1% wealthiest people in the world. But the why you do and how you do is so important and much more important. Otherwise, you can find yourself buying bad businesses that losing money. You can create horror stories. And I know about those horror stories because those horror stories come to me after they bought business that isn't making any money, after they invested their life savings and their family life savings sometimes, and they need to deploy capital into those businesses just to keep them alive. That's a horror story, and a lot of it comes down to their mindset and how they even approached the world of doing deals in the first place, right? How they picked their things, like how they picked the sector, right? Things like how they even positioning, right? How they position themselves in the market so someone will treat them as a credible buyer, right? What is their criteria for a good deal? All those things are crucial, right? And how they're doing all those things, even if they don't necessarily have experience. Because for someone with experience, it's weird to write and talk at the same time, right? All those things are crucial, everyone in a different way. Sector, guys, if you're gonna pick a sector that you don't like, or the last thing you want is find yourself buying a business that you own for the next 15, 20 years to find out that you climbed their own tree, right? You want to climb the tree, but you want to make sure you climb the right one. So what are you doing to pick the best sector? And let me know in the chat, maybe, what is the sector that you want to buy a business in? Do you know the sector that you want to buy a business in? Do you have an idea or a reason why you want to buy a business specifically in that sector? Right? And a lot of it comes down to mindset. What's your mindset behind picking that sector? Why are you looking for that business? Do you see yourself owning a business like that for the next 5, 10, 20 years? Do you see yourself? I really like the idea of the test of the Forbes magazine test. Assuming you're going to be buying hundreds of businesses in the next 5, 10, 20 plus years, and you're going to be on Forbes magazine 10, 20 years from now, are you going to be proud of owning that business? Are you going to be proud of having an article on you saying, hey, this guy, you, is owning a business in that sector? Are you going to be proud telling your mom that you own a business in that sector? Right? Those are some of the questions you need to ask yourself. What about criteria? What is your criteria to buy a business? How much money do you need to make to what? To replace your 9-to-5 job, to maybe replace your existing business income, or at least double it? For some of you, maybe you already have a business. So for some of you, maybe you already sold businesses in the past and you're like, you know what? I have enough passive income from my assets, and I will only buy a business if and when it's going to make me X amount of dollars. And if it's not going to make me at least that money, I'm not going to buy that. Others here might say, hey, you know what? I don't care how much money I'm going to make from the deal. I just want to do my first deal as soon as possible to get some experience. Those questions are critical. And you got to ask yourself what it is for you. What is it for you? What is the criteria for you to buy a business in? How do you come up with that criteria? What are the things that you're specifically looking at? Is it cash flow? Is it how much equity you have in the deal? Right? Is it sector, location? Is it potential? What about maybe trends of that sector? And all of those comes together, right? How are you picking your criteria to buy a business? Maybe it's the amount of capital you need to bring from home, money. So this is out of pocket money. What about positioning yourself as a credible buyer? Because guess what? The more you know how to position yourself as a credible buyer, and positioning is very similar, because if you know how to position yourself well, people will look at you as a credible buyer, even if you don't necessarily have experience. So what are you doing to position yourself? What kind of a team do you need? What kind of words do you use or scripts do you use to make sure that people take you seriously? Because if people are not going to take you seriously, guess what? You're not going to get the best deals at the best terms. You might get some deals, but they're sometimes going to be shitty deals. Do you want to do shitty deals, or you want to do the best deals? Right? So those are some of the things when it comes down to deal flow, as far as I'm concerned. So all of this, in my mind, is deal flow. And those are some of the things you got to think about. What are the trends? What is the potential? What is the cash flow? What is the equity you get? What is the sector? What is the location? What is the money out of pocket you need to put from home? Let me know in the chat if it's resonating with you. Second step, what is the second pillar that our best performing clients were able to muster in this world of doing deals? So what is it? Any guesses? Well, the way that I see it, it's everything. Deal structures, capital structures, right? And let's talk about what that means. Deal structures. So what are deal structures? And why are they important? And by the way, do you agree with me that if you're able to master everything related to deal flow, like this can save you a lot of money? Like if you think about those things from day one. Like, you're not just gonna randomly, I don't know, try to throw spaghetti on the wall hoping it's gonna stick. You're gonna be very focused, very specific, a laser target towards what you're looking for. And then, a lot of people talk about the law of attraction. The way that I see it is, if you're clear and focused on specifically what you want, you're just going to be very aligned and congruent, and your actions are going to determine things towards specifically what you're looking for, towards your goals. So deal structures, what are deal structures and what's related? So here, it's pretty much, a lot of you heard about things like seller financing, right? Seller financing, right? A lot of you heard about earnouts, right? Or basically any no money out of pocket structures, right? I could probably do a whole, 5 hours training just on different no money out of pocket structures that we have. We have dozens of those that we use, but all of you are probably familiar with seller financing earnouts, which is just a way for you to buy a business using financing that isn't necessarily coming out of your pocket, right? And when you understand those, it's really giving you a different opportunity on how to approach each deal you're looking at. What else? Obviously, it can be things like roll-ups. So for those of you who are following us for a while, or saw some of our last trainings, you know that one of our clients, Michael, just rolled up 16 companies in less than 6 months, doing total $62 million in EBITDA, which is the pre-tax profits, around $200 million in revenues. He didn't use $1 out of his own pocket to do this, right? So that's the roll-up structure. I would say that it also comes down to everything related to investors and institutions, right? Maybe we have a great Rolodex, you can put it here, of like, think about that, like, guess what, if you're going to do deals for years, you think you're going to build yourself a Rolodex of people you can trust, people that are reliable, people that maybe did deals with you already. So we have hundreds of those. And when you master, obviously it's everything related to how to make offers, right? How to analyze deals, how to protect downside, because when you do deals, you want to do the most, like when you make investments in general, the best investors in the world are creating themselves asymmetric risks. They're doing asymmetric type investments, which means there's an amazing upside potential and the downside is very minimal. Those are the deals you want to be part of. And that's what all of this, right? How do you know what is a good deal or not, right? It all starts with this. Oops. Oh, this one. Let's actually clean this. I really like that software. My handwriting is terrible, but I really enjoy this. Right, so what do you know about those things? What else can be part of here? What do you do to build rapport with the seller? It's all about negotiations. How do you make your first offer? What are the terms for your first offer? What is your negotiation strategy for if and when you receive no? How much you're going to stick to the deal versus filter and move forward? This is also an important criteria you got to have with yourself. right? So what is your process for that? Seller financing. Beautiful thing that is possible in this world, right? Understanding that there's the option for you to de-risk your investment, even if it's investment just of time, by having the seller financing some of the acquisition costs. It can be with equity, with debt, or whatever the terms are. Earnouts. Earnouts are very similar to seller financing, but are basically an opportunity to do it dependent on milestones of the deal. And I've seen earnouts on anything you can imagine, anything from how to do earnouts based on employees that you're going to hire, based on future revenues, profits, based on different departments, hitting different KPIs. There's a lot of ways to look at it as well, right? No money down. Did I write protecting your downside? Yes, I did. Probably one of the most important things you want to learn. Right? How do you make sure that the seller is taking you seriously and is willing to share with you financials? What is your process for that? And it all comes down to, remember here when we start, it all comes down to you knowing how to position yourself as a credible buyer and positioning yourself as a credible buyer to begin with. If you having a better team, if it's you knowing how to position yourself with the right words, right? All those have a major. So let me see what I can. So no money down structures. Let's talk to one of them. Really cool this structure that I like. One of our clients, Lyle, bought I think his 4th business right now this way, which is he went and used the acquisition target supplier to do a rebate, which is to basically give them a almost like a discount for the period that the supplier worked with the acquisition target. I don't want to overwhelm you, but in a nutshell, it means going to the supplier of the acquisition target and getting financing for him. And that's just one deal structure that is really, really great. He just took that one structure and went and did 4 deals with him. Right? So that's just one way. We have, like I said, dozens of ways. I'll talk about roll-ups a little bit. So roll-ups, and for those of you or in our Facebook group, I did a full training on this roll-up case study on how to pick the sector, negotiating deals, finding terms. So roll-ups is what Michael just did, basically did. And there's few ways to do roll-ups. You can do one deal at a time, or you can do what Michael did, it's basically going to 16 companies at a time, getting to agreement with each, and then raising the capital to close on all of them. Investors, a lot of our clients are just going out there and raising from investors to close their deals, right? There's a process to go and reach out to investors and position yourself against investors. Obviously, institutions can play a big part of things as well, right? A lot of banks in the US, there's the SBA, et cetera, et cetera. Rolodex of other financial institutions. We have more, cool, I didn't even see all those colors. Rolodex of other financial institutions. Right? We have hundreds of those, mezzanine letters, family offices, private equity firms, venture capital firms. So many ways to access those deals. Making offers. What are you doing to make your first offers? Are you making it based on multiple of EBITDA, based on asset value, based on whatever the seller or the broker asked you? Protecting downside. There's a lot of ways you can protect your downside. One of the first things you want to do is making sure that you're buying each company with a separate entity, with a separate LLC, perhaps a trust or whatnot, depends on your situation. How you're building rapport and making sure that the seller is taking you seriously, right? Obviously, signing an NDA is one of the best things you can do to show him that, you know, hey, I want to sign an NDA to make sure that you feel comfortable sharing the financials. So are you signing an NDA with the sellers you're talking to? Negotiations. What are you doing when someone's telling you no? Do you know how much to offer in the first place so you can have a plan in your negotiation? Do you have a strategy in mind? Are you doing enough homework about the seller to understand what he wants, when he wants that, what he's going to do with the money after the deal? And what about filtering? Right, this is one of the most important things that no one's talking about. How much time are you going to waste on deal? Are you going to waste 6 months, 12 months on one deal? Or are you going to tell them, hey, you know what, goodbye, I have 2 other deals? Super important. So those who master all those steps, again, deal flow, deal structures, and master all those steps, that's how you can get crazy results. Like Borislav, who came to us as a truck driver and bought a business doing 13 million a year in revenues using none of his own money. And again, this is not a get rich quick thing, but this is what's possible. This is a get rich for sure. If you're willing to do the work, you're committed, and you want to be resourceful and take action. And a lot of it also comes down to your mindset and how you're approaching things in the first place, right? It's all about your perspective. Because here's the thing: we all make decisions based on our perspective. The hardest thing is making decisions based on where we want to be. The overweight person is only overweight because they make choices that an overweight person makes. They have a fundamentally flawed decision-making process around health, fitness, and nutrition. It's not until they make the decisions of a fit and healthy person that they become a fit and healthy person. You get what I mean? It's almost like you need to have this fit person mentality in an overweight person body. And only when you have the fit person mentality in an overweight person body, that's where you can start making decisions and taking actions like a fit person. And that's how the external world, that's how you can then get yourself a fit body. Same here. You want to be a successful CEO, a successful acquisition entrepreneur, you got to make decisions. If it's action that you're taking, if it's decisions that you're making, if it's habits that you're having, if it's investments that you're making, if it's a belief in yourself that you're having as the person that you want to be. And asking yourself, what would that person do? And make decisions based on that person, of a place of abundance and not from a place of luck. Because if you love the place you're at right now, awesome, don't change anything. But if you want to change, you got to change your perspective, you got to change your decisions, you got to invest in yourself emotionally, mentally, and make decisions and actions like the person you want to be. And I mean, can you figure it out on your own without changing the perspective, without investing in yourself? Maybe, but how much 5, 10, 20 years of figuring it out on your own, are actually worth it to you? Like what 5 years, 10 years, 20 years worth it for you? What are the potential mistakes that you can make in that period? And if you want to be in the top 1% entrepreneurs in the world, which you can get to without one acquisition, it's like literally one deal can get you there, you need to let go of the ego. You got to start making decisions like someone who's already been there, done that, and learn from someone who's been there, done that. So let's go to step 3. Any guesses on step 3? Just take a sip of water. Any guesses, guys? Step 3 is all about deal team. All right, so what is deal team? And again, if you're joining us just now, I'm writing a lot of notes here on this presentation. If you want this document in the end, private message me on Facebook, or just private message me on Facebook and say that you want the notes. It will be the easiest. So deal team, what deal team? For me, it means anything related to management, right? It means everything related to advisors. Who are your advisors? Who are your mentors? Which is similar to advisors, but not really. What else? Can be lawyers, right? Can be accountants. Can be bankers. Can also be investors here. Can be employees. Can be customers. All those will determine your success in this pillar, right? And the more you're able to master everything related to all of those people, the better you'll be, the better results you'll get. Again, those are the three pillars that our best clients were able to master. So management, what's your plan? Who's going to run the business? Oops, this again. Who's going to run your business day to day? Who's going to be the CEO? Is going to be you? Is going to be someone else? How are you paying yourself? You're paying yourself an income, or you're just paying a CEO an income, and maybe you're paying yourself dividends. What's the experience of the CEO? It's got to be someone's baby. If it's not someone's baby, no one's going to give you money. Advisors, who are your advisors? Do you have a team? Do you have a board of director? Do you need a board of director? When are you using them? How much you're using them? How you're paying them? Mentors, who are your mentors? What they've done? Who they helped? How they can help you? Are they going to be there to be responsive? Like, again, some more horror stories that I've heard of people who hired mentors, and then when they have questions, oops. There you go. And then when they have questions, the mentor is not answering them. So what's the point? Exactly when they need that. Who are your lawyers? Do you know how to make sure that they're getting paid, ideally from the acquisition target cash flow and not necessarily from your pocket? Same goes for accountants, right? Ideally, you want to pay them from the acquisition target cash flow, not yours. Ideally, you pay them on deferred fee basis and not out of your pocket right from day one. What about bankers? How do you build relationship with bankers to make sure that you have the capital when you need it? That you have proof of funds so people take you seriously? What about the investors? What are the terms that you're giving your investors to make sure that they're happy and there's a win-win? What about employees in the business? Do you keep them in mind? Do you bring them as investors perhaps? Do you give them options in the business? Do you incentivize them to make sure the business grows? And customers, what about customers? Maybe you bring them as investors with some kind of a crowdfunding. Do you have a process to, to make sure that they're growing with you? And I'll also add suppliers, right? What's your process with them? So all those you should keep in mind as well when you're looking at deals. So let me know in the chat, do you feel like mastering those steps could be the answer for you to do more deals? And if so, I'm curious, why? Why do you think that way? And I'll try to go and see what you guys saying. Got it. Connected with you, LinkedIn. Da, 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 da. Second search on today. Da, da, da. Close the deal. Yep. Yeah. Cool. So those are the 3 steps, guys. Again, if you want the notes, just private message me on Facebook, and we'll send it to you. If you feel like this is valuable for you, again, I would suggest you to start making a decision like the person you want to be. I'm looking to build a community of people who want to do acquisitions, who don't want to do just one acquisition. So ideally want to do like Michael, 16 acquisitions, and I could partner with them, bring my experience, my network, my capital, and help them do more deals and eventually go public. The biggest companies in the world, guys, are, in a nutshell, just companies that buy a lot of small companies. And that's what I want to do with some of you guys who are willing to be, are willing and want to be, do have more. So if that's you, I would suggest you to go right now to acquisitions.com/apply. Acquisitions. Yep. Not an easy domain to write, but go to this call, go to this link, book a call with us, book a call with me and my team. Let's talk to you. Let's see if we can help you. Let's see where you're at, where you want to be. If we feel like we can help you, we'll let you know what's the next step and what it looks like to work with us. If not, we'll start to steer you to a different direction, the right training for you, perhaps. We have a lot of free training out there on YouTube or in the Facebook group. This is just one of them. Hopefully you enjoyed it. Again, if you want those notes, private message me on Facebook and we'll send them to you. So with that being said, I might look at the question or two. And if I don't see questions, we can just end here. And yeah, again, if you want those notes, private message me on Facebook. And if you want to do more acquisitions and you want to explore getting support from us, go to acquisitions.com/apply. So let's see what we got here. Do you offer mentorship, Sam? Yes, there are ways to work with us. So go to acquisitions.com/apply, and you'll see what it looks like. Like, talk to us and we'll see how we can help you. Anyway, guys, with that being said, hopefully you enjoyed that. If you did, let me know in the comments below, and we'll try to do more of those. Take care and have a good one. Bye-bye.